So with the Bank of Canada's quarter point rate drop behind us, does this mean that the housing market is about to have turned a corner? Does it mean that house prices are no longer on the downtrend? And does it also mean that May of 2024 will be the last time, at least this year, where house prices actually see slow activity and decline? That is the question that's being asked right now. That's despite the fact that in May of 2024, the benchmark price is down just a hair over $714,000, which is down 0.2% month over month and 2.4% year over year from April of 2023. There's a lot of suggestions, however, that that's probably going to be as low as we go as we continue to move forward into a lower rate environment. So what most people want to know right now is, are house prices going to continue to decline? What is it looking like for listings across the country of Canada and certain regions? And does it make sense to put my money into the real estate market right now? Now, I know that there are people who are watching this video that are going to say the market is going to crash regardless of what I have to say, and those guys are probably going to leave some negative comments below, so feel free, but just please leave a good point as to why that is the case. For anyone else who is genuinely interested in what the market is predicting and what many of the economists and forecasters are suggesting, I'm just going to dig into the data here today, so it's not going to be opinion, although I might add a few pieces of color as it pertains to anecdotal feedback, what I've seen in the few weeks since the Bank of Canada dropped the key interest rate by 0.25%. Now, unsurprisingly, in May of 2024, there were some drops across the board, but let's be honest here, when we talk about drops, we're talking about slight little decreases, which is very unusual in the real estate market, especially for a spring market where prices were expected to rise considerably. Now, it's no surprise that house prices either remained the same or fell flat in many different areas because almost everybody and their grandma was waiting for the Bank of Canada to lower interest rates at 0.25%, which they did in June down to the overnight rate of 4.75%, which had zero impact on what most people can actually qualify for because it's based on, as you know, the stress test. And the stress test is based on fixed rates because the fixed rates are currently lower than variable rate mortgages. So ultimately, all I'm saying is that people actually can't even qualify for more money today than they could before. But because of the psychological impact, there's a lot of people out there who thought the market was about to take off, and they weren't wrong. Here we are sitting in the middle of June of 2024. And yes, I dated it, the middle of June of 2024. And we've already seen a little bit of an uptick in activity. And this activity is one of the main reasons that CREA, Canadians Real Estate Association, is coming out publicly and stating that they expect the real estate market to actually turn around and turn a little bit of a corner. And they're not the only ones who are thinking as much. BMO also recently published a graph showing an expected increase in house prices, although not extreme. Their anticipation is that we're about to see from a dip to an increase of interest rates over a more normalized level as rates go down. Now, BMO's report also highlighted some considerations about affordability, suggesting that we'll actually start to see house prices more go up with incomes as opposed to just the declining interest rates. We'll wait and see what actually happens there. But virtually all the economists are predicting the same thing, in the sense that when interest rates go down by enough, who knows what enough means? In my world, that probably means an overnight of around 4%, somewhere in that ballpark, which is about 0.75% from where we are at today, then we will see a meaningful impact in the housing market. That's likely to occur sometime in the beginning of 2025. Now, until then, what do you believe is going to happen when it comes to house prices? Well, you may not know, and I might not know, but a lot of the economists and quote-unquote experts are predicting that, as I mentioned, May is as low as it gets. So we start to see increased action in June, which means we'll see increased house prices, if even only by a little bit, leading into the July and the summer months, and to what many expect to be a late spring market. Now, let's call a spade a spade. There are some markets that are not going to recover immediately, namely the issues that we are seeing right now in the Toronto condo market that have been well publicized, with all sorts of condos being just complete and many people not planning to complete on those condos, or trying to assign them or trying to rent them but not able to meet their actual cost. We are seeing an influx of that particular type of property hit the marketplace, and listings are actually up month over month and year over year, which, no surprise, is slowing down that segment of the market. But the interesting fact is, we've seen a lower amount of listings in the detached market, which has led to prices holding very steady and just slightly starting to see some increases as activity in the detached market has continued even with a slowdown of the condo market. Now, do we see that continue? I don't know, but the listings are up and we are seeing demand continue up. There are some anomalies, however. The one market that is staying strong is the Alberta market, where we have actually seen the Edmonton market completely take off, almost like it was Calgary of 2023. Multiple offers are no longer a thing of ghost stories and only Vancouver and Toronto. We've now shifted the multiple offer into the suburbs of Edmonton, which is a hot market, and action has increased twofold, with listings going up like crazy, but demand soaking them up right away. Alberta's been a little bit of a unique market because it's hot, people are moving there. The province is still taking in a lot of potential migrants and immigrants. And from my perspective, I have no idea when the Alberta market really slows down at this point right now, but it is hot and it's on fire, and we still have a high amount of demand from people looking to buy real estate in those markets. Now let's get to some stats and some numbers, because I know we love that. Active residential listings in Ontario specifically rose 63.9% year over year, which is another one of the reasons that we've seen the market slow down. More supply, rates were high, and the question mark is, are there more buyers that are looking to buy? Listings over the course of the country are up over 28%. Remember, back in 2023, there was hardly anything to buy. This year, sellers are out in full force. Now, some other interesting data and reports is that in May of 2024, CMHC reported more housing starts than the previous number of months, although there's some question marks around what their intention is there, with CMHC's multifamily select program recently having been chopped at the knees, making it virtually useless in a lot of the provinces. For more on that, we can post a video about the multifamily program, but basically there is a program by CMHC that was supporting building multi-unit properties that is virtually impossible to actually use in markets like Toronto or Vancouver, because essentially you have to more or less rent properties or rent houses at below market value, which means it is not cost effective anymore to build them, and builders are staying away from those cities and or moving to smaller markets where it does make sense to build those types of properties with that type of program. Now, as far as where things go from here, again, we already mentioned that we've seen reports from BMO, we've seen reports from RBC, we've seen reports from CREA. Virtually everyone is suggesting the housing market has been hot. Anecdotally, from my experience right now, I work and own a mortgage company doing anywhere between 30 to 40 transactions on average per month. We have seen a noticeable increase in the amount of transactions over the course of the time since the Bank of Canada increased interest rates. However, there hasn't been the same amount of interest as maybe some are proposing, and we're certainly not going back to the days of 2021 where rates were at 2%. So I think most people are actually overstating the impact of a 0.25% rate cut, and in my personal and professional opinion, the market is starting to just move right now. It is still actually a great market from a buyer standpoint because you have a lot of negotiation power and you can actually pick and choose where you want to live. Sellers are actually selling properties if they're priced correctly, and so they're not stagnant. It's just people that are living with prices that they're expecting from 2 or 3 years ago that are sitting on the sidelines, and I think that's one of the big reasons why we're still seeing a large glut of properties that are sitting on the market outside of the nuances of the Toronto condo market. Now, where do things go? It's hard to say. I mean, consumer confidence is everything, and psychology is absolutely everything in this marketplace. When people start to see fixed rates below 5%, heck, if we see fixed rates below 4% by the end of the year, best believe we will see a lot more people jump into the marketplace, because let's be honest, there's a lack of logic when it comes to real estate in our market, and typically speaking, most people wait to see what other people do before they actually take action in our real estate market. Now, the one biggest surprise right now is something that I've repeated throughout this entire video, which is that one of the biggest things that we've noticed is not in the data, is not necessarily just the uptick of buyers and sales, but the biggest thing is the number of listings. So it appears that for the most part, more people on the listing side and the selling side were waiting to list their properties based on the assumption that a 0.25% rate cut would have a significant impact on either their prices or the amount of buyers getting to the market. And that's the one thing that I think is a huge mistake or a massive mistake. And that is one of the reasons that we probably won't see house prices go up dramatically right now, because supply is continuing to grow. Now, in my personal experience, I'm seeing quite a few people who are downsizing, elderly folks that were waiting until this time for some reason to let go of their properties. And a lot of people just generally speaking, downsizing properties and selling off investments. This will create opportunity for buyers. This will allow more normalization at the price point that they are at in the marketplace. But the flip side to that is when I'm talking to potential buyers or potential people that are out there, most people are still saying the same thing. I'd like to see rates come down more before I buy. And so the question mark is, do you buy now knowing there's tons of inventory and house prices might not increase for 6 to 12 months? Or do you wait, see rates come back down and jump in when everybody else is jumping in and hope that house prices have not increased dramatically? I'd be curious, what would you do in this market right now, assuming you're interested in the market? Would you buy now? Would you wait? Please leave me some comments below. And if you like the video, please hit that like button, hit that thumbs up button. I'd love to see you on the next one. Thanks, guys.